Hello, everyone. Welcome to the B&S channel where we explain the most efficient ways to budget and save your money. Today, we're diving into the top 10 budgeting techniques specifically designed for a yearly salary of $50,000. Whether you're just starting out or looking to fine-tune your financial strategy, these techniques will help you make the most of your income. Let's get started. Our first technique is the 50-30-20 rule. This rule helps you allocate your income effectively. You'll devote 50% of your salary to needs, 30% to wants, and 20% to savings and debt repayment. Imagine you make $50,000 a year. After taxes and deductions, you have $40,000 left. You allocate $20,000 for needs like rent and groceries, $12,000 for wants like entertainment and dining out, and $8,000 for savings and debt reduction. Next up, we have the envelope system. This technique involves dividing your cash into envelopes for different categories and spending only what's in the envelope. Let's say you set aside $100 per month in an envelope for dining out. Once that envelope is empty, you'll stop eating out until the next month. Moving on to zero-based budgeting. This method assigns every dollar a purpose, ensuring your income minus expenses equals zero. After accounting for all your expenses, savings, and debt payments, your budget balances at $0, making sure every dollar is accounted for. Now, let's talk about the emergency fund first technique. Prioritize building an emergency fund of 3-6 months worth of expenses before other savings or investments. Allocate $2,000 per year toward your emergency fund until it reaches $6,000 to provide a safety net for unexpected expenses. Pay yourself first. Here's the pay yourself first approach. Set aside a portion of your income for savings before paying other bills. Allocate 10% of your salary, which amounts to $5,000, directly into a savings account as soon as you receive your paycheck. Now, let's tackle debt with the debt snowball or avalanche technique. Prioritize paying off debts by tackling the smallest balance, snowball, or the highest interest rate, avalanche, first. Imagine you have a credit card with a $1,000 balance and a student loan with a $5,000 balance. Using the snowball method, you'd pay off the credit card first. Moving on to cash-only budgeting. Use cash for discretionary spending categories to help control overspending. Withdraw $200 in cash per week for entertainment and groceries, and stick to that limit to manage your spending. Next, let's explore bi-weekly budgeting. This technique is based on your pay schedule, accounting for 26 pay periods instead of 12 months. With a bi-weekly paycheck of $1,923, $50,000 per 26, allocate expenses and savings based on this schedule for better financial planning. Now, let's discuss sinking funds. This involves setting aside money each month for irregular expenses like vacations or annual insurance premiums. Allocate $100 per month to a sinking fund for your annual $1,200 vacation, ensuring you're prepared when the time comes. Last but not least, let's leverage technology with budgeting apps. These tools help you track spending, set financial goals, and manage your budget efficiently. Download a budgeting app, input your income and expenses, and monitor your financial progress with ease. And there you have it. 10 powerful budgeting techniques tailored to a $50,000 yearly salary. Remember, everyone's financial situation is unique, so choose the techniques that resonate with your goals and circumstances. Now let's take a look into a practical example of budgeting for a salary of $50,000. We'll break down the average living expenses and savings goals to help you manage your finances effectively. Let's get started. Monthly take-home pay. The net amount of income received after the deduction of taxes, benefits, and voluntary contributions from a paycheck. Assuming a tax rate of around 20-25%, your monthly take-home pay might be approximately $3,500 to $3,750. Budget categories breakdown. Let's start with housing. Rent, mortgage, $1,200. Utilities, $300. Internet, cable, $50. Next, transportation. Car payment, $350. Gas, $100. Insurance, $150. Maintenance, repairs, $50. Now, groceries. Food, $300. Healthcare expenses. Health insurance premium, $150. Medications, copays, $50. Managing debt. Student loan, $200. Credit card, $100. Prioritizing savings. Emergency fund contribution, $100. Retirement fund contribution, $150. A little for entertainment. Dining out, $100. Concerts, $50. Movies, $50. Taking care of yourself. Toiletries, grooming, $50. And a bit for miscellaneous expenses. Clothing, $50. Gifts, $50. Public transportation if applicable, $50. Building that safety net. Emergency fund, $100. Total monthly expenses. Recurring living expenses, such as your rent or mortgage, car payment, and utilities. It also includes the more variable amounts you spend on haircuts, groceries, and clothes each month. Adding it all up, your total monthly expenses come to approximately $3,250 to $3,500. This leaves you with around $250 to $500 per month for additional savings, discretionary spending, and unexpected expenses. Annual savings and goals. Something that you are saving to have in the future. Now, let's look at your annual savings and goals. Emergency fund, $1,200, $100 contributed monthly. Retirement fund, $1,800, $150 contributed monthly. Finally, your annual discretionary spending. Entertainment, personal care, clothing, gifts, transportation, etc., $250 to $500. And there you have it. An example of budgeting for a $50,000 salary. Remember, this is just a guide, and you can adjust the numbers based on your personal circumstances and goals. Thanks for joining us today, and until next time, happy budgeting. Thanks for watching.